Fusion Mobile, quality e-learning experience on the go.
You are welcome to Fusion Mobile e-learning platform. I'm Olokobi Pelumi, the accounting tutor. In this class, we'll be teaching accounting equation. Accounting equation. So under the topic, we'll be teaching accounting equation itself, effect of transactions on the balance sheet. Generally, accounting equation consists of three terminologies, which are the assets, capital, liabilities. The assets is the property of the business, that is the resources owned by the business. They are the resources used by the business in generation of revenue. Capital. The capital shows the owner equity in the business. It shows total amount of money contributed by the proprietor of the business in the establishment of the organization. While liabilities shows total amount of money owned by the business to the outsider. So it is the obligation of the business to the outsider. The resources of the business can be derived or generated from these major two sources, that is the capital contributed by the owner and the liabilities contributed by the outsider. So the summation of the capital and the liabilities give us the assets. So which means assets equal capital plus liabilities. So the capital shows the owner's claim on the assets, on the resources of the business, while the liabilities shows the outsider claims on the assets or the resources of the business. In other words, this equation can also be written in another way, which is capital equal assets in collecting items minus liabilities. Otherwise also can also be written as thus: liabilities equal assets minus capital. So in illustration, you have to complete the gap below, which is accounting equation. You have the assets, capital, liabilities. In the first instance, we have the assets, that is the resources of the business, to be 55,000. While the capital is 16,900. So we are required to find the liabilities. Something like this. The first step in this is for us to write the accounting equation. Generally, accounting equation is the resources of the business, which is the asset, to be equals to the capital plus liabilities, or capital equals to the assets, the resource of the business, minus liabilities. Also, liabilities equal assets minus capital. So in the first illustration, we are asked to find the liabilities. So we have to use this equation. That is, liabilities is assets minus the capital. So we have assets at 75,000. So we are required to find the liabilities. And generally, we have to use this. The liabilities equal to assets minus the capital. So liabilities equal assets 55,000 minus the capital 16,900, which amounts to 88,100. B, we have to find the asset by giving the capital and liabilities. So generally, asset equals to capital plus liabilities. So assets equals to capital plus liabilities, 34,400, and then amount to 51,600. So you can do the rest yourself. So you have to find the capital, then that will be assets minus the liability, and D, you have to find the liabilities. It's going to be assets minus the capital. By E, you are also asked to find the liabilities, which will be assets minus the capital. Effect of transaction on the balance sheet. The balance sheet is the tabular representation of the accounting equation. That is, the assets, it consists of the assets, the liabilities, and the capital. Generally, all transactions in the business must have an effect on the balance sheet. So in a transaction, there must be twofold effects following the principle of double entry. So the effect of transaction can either be 1. Increase both assets and liabilities. 2. Reduce both assets and liabilities. 3. Increase some assets and reduce others, or vice versa, which is to reduce some assets and increase others. 4. Increase some liabilities and reduce others, and vice versa, which is reduce some liabilities and increase others. There is the illustration on the effect of transaction on the balance sheet. So we are asked to show the effect of the following transaction on the balance sheet. Number 1, we have started business with 30,000 naira at bank. A, effects. Started business with 30,000 naira at bank. Bank will be affected, and the amount used in starting the business, 30,000 naira, that amount is called the capital. So the effect of this transaction will be an increase in assets, which is the bank, because the amount in the bank is the property of the business. But also there will be an increase in capital. That is the amount used in starting a business, the amount introduced by the proprietor. So we have increase in capital, which is the amount, the capital itself. So on the balance sheet, this tabular representation of the accounting equation, we're going to have balance sheet. So we are going to have bank, 30,000 naira this side, naira this side. So we are going to have capital, 30,000, and then close. So B, purchase motor van, 261,000 on credit. motor van will be affected on credit. That is, when the motor van were being bought, cash were not being paid to the supplier of the motor van. So creditor is being created from this transaction. So the effect of this transaction will be, the effects is going to be increase in assets, which is the motor van, and increase in liabilities, which is the creditor, that is the supplier of the motor van. So generally, in our balance sheet, so we are going to have, previously we have bank, which is 30,000. We also have capital, which is 30,000. Well, so we have an increase in assets, which is the motor van. All assets will be on this side. Capital and liability will be on the other side. So motor van, which is 360,000, 16,000. Well, also an increase in liabilities, which is the creditor, 216,000. So the addition of this and this give us 346,000. 346,000. So C, we have he bought goods 5,000 naira from Abiodun on credit. Goods brought from Abiodun, that's an asset that becomes the property of the business, which is stock. Why goods brought from Abiodun? Because the goods were not being paid by cash immediately, so Abiodun becomes the creditor also. So the effects of this transaction be an increase in assets, an increase in liabilities. So the increase in assets is the goods coming into the business, which is referred to as stock or inventory, while the increase in liabilities is the creditor in respect of Abiodun. So an increase in liabilities, creditor. So the effects on the balance sheet will be as thus. We have the balance sheet. Previously in B, we have bank as the assets, property of the business with the bank. So we have motor van, which also serves as the resource of the business that will be used in generating revenue. So we have stock, the goods brought from Abiodun. Stock, which is 5,000 naira. That also becomes the property of the business. So previously we have capital, the amounts introduced by the owner of the business, 30,000. We have creditor, but there is an increase in creditor, because although we have creditor 261,000 previously, so there is an increase in liabilities, which is creditor, by an amount of 5,000. So we have to have 316,000. It's 5,000. So that's amount to 2,321,000. Then the total of this, then give us 351,000. Then we have 351,000. On day, we have is sold goods for cash 3,000 naira. Effects. The effects of the transaction be an increase in assets and a reduction in other assets. Goods that is being sold is going out of stock, so there will be a reduction in stock. Why cash is coming in, there will be an increase in assets, which is cash. So the effect is increase in assets and decrease in assets. The increment in assets is the cash that is coming in from the sales of goods, while also the reduction in assets is the goods going out, which is the stock, from the stock. So the effect on the balance sheet, we have the balance sheet. Previously we have the transaction does not affect the capital, which is 30,000. Transaction doesn't affect the creditor, which is 321,000. While also it doesn't affect the bank, so we have 30,000. It doesn't affect the motor van. No. Then which is 316,000. Why also the stock is being affected. So there is reduction in stock by 3,000. So previously we have 5,000 minus 3,000. That gives us 2,000. Then we have an increase in assets, which is cash. So there will be introduction of cash, which is 3,000. So that amounts to 1,000. So we have illustration 2. The question is to classify the following items into assets and liabilities. Number 1, we have motor vehicles, premises, creditors, stock, debtors, bank, cash in hand, loan, and machinery. Divide assets, liabilities. Okay, firstly we have motor vehicle. The assets are the property of the business, the resources used by the business in the generation of the revenues. Motor vehicles will be an asset because it's going to be used in generating revenue. It's an asset in business. Premises, like building, is also the property of the business. That falls under assets. Creditors, that falls under liabilities. Amounts owned by the business to the householders. Creditors, stock of goods, that shows the property of the business. Shows the property of the business. Debtors, money owned by householders to the business. These are the debtors. Amounts owned by the what? Outsider to the business. Bank, an amount of money in the bank. That also forms the property of the business. Cash in hand, amount of cash available at hand for use of the business, also forms the property of the business. Loan, how's the liability? A money received by the owner of the business from outsiders. Machinery, that also forms the property of the business, which is the asset. So we've treated accounting equation, effect of transaction on the balance sheet. And previously, we said the accounting equation shows that all assets of the business must be equals to capital plus liabilities. And we said the effect of transaction on the balance sheet means all of the transaction of the business must have effects on the assets, liabilities, and capital. That is, this effect includes either to increase both assets and liabilities, or reduce both assets and liabilities, or to increase some assets and reduce others, or to increase some liabilities and reduce others. So, some question will be displayed on your screen. Then make some efforts to attempt the question. While also, if you are having some confusion, if you are having any confusion about the topic, do make attempts to replace